What's up guys, Hector here. In this video, I'm gonna be doing a quick live trade that I took yesterday on, I believe, NASDAQ, and how we made $310. And then after that, I'm basically gonna do a quick recap of my thought process, market structure, how I got in and out of the trade. All right, we took sells on NASDAQ. Good sell off right here. What's up, guys? We're gonna do this trade recap real quick and we'll just get straight to business. So every day on the lower time frames, on the 5 minute, which is typically my execution time chart, that or the 15, we mark out previous session highs and lows, and then we go to the hourly and we mark out important levels of liquidity on the hourly where price is likely to go on that day, right? Either up or down. And after kind of combining that with market structure, our daily bias on market structure, we can look in the smaller time frames to take that entry to get price to take price all the way into those higher time frame levels of liquidity. Okay, so we're going to start out with the smaller time frames. Okay, we have this was London highs, this was London highs, this was London lows, that was Asia highs, Asia lows was down here, okay? But here's the important thing. Before New York, we have London. Before London, we have Asia, okay? So if London takes out Asia highs and lows, then we completely take those lines off the chart because that liquidity has been tapped into, okay? Same thing. When New York takes out London, we unmark the lines on the levels of liquidity, right? The highs and lows on London. So essentially, London lows took out Asia lows. So we'll take that off now. And then London highs, or I'm sorry, yeah, London highs took out Asia highs, okay? That didn't come off. Took out Asia highs. So at New York, right, at this blue highlighted area is where New York pre-market starts. Right here is New York open. Okay, so at New York pre-market, we had price immediately take out London highs. So we'll take that off, okay? And then right here, right before, right, basically at market open, New York market open, London lows were taken out. So London highs and London lows were taken out by New York. And then Asia highs and Asia lows were taken out by London. Okay. So now we'll go to the, that doesn't typically happen that quickly every single day. It just happened to happen today. So then we'll go to the hourly chart and we'll mark out important levels of liquidity. Okay. So this is the day right here. We'll mark out this liquidity right here, right? These are levels where price is likely to get to if it goes bullish right here as well, and take out these orders that are sitting above these levels, right? There's people that short sold the market here and they put their stop orders right here. They put their stop orders right here, right above these wicks. And there's a lot of liquidity there where price can come and tap into and take out those short sellers and fill those orders. Okay. We do the same thing on the downside. On the downside, first of all, we had this huge gap, right? So that's good indication that price wants to come in here and fill all these orders. Okay. So liquidity down here, we had this important level of liquidity, which is pretty strong, and then we had that gap right under it. Okay. So we took shorts? Why was my bias bearish for the day? Okay, even though we're seeing price kind of trend up right here, right? Why was my bias bearish for the day? Because we can see basically price consolidating, right, on the hourly, and it's starting to top out at this level. Okay, now you have to be able to switch your bias. If price starts to push up, then I'll be looking for longs. But why did we take shorts? Because we were looking for structure to potentially break to the downside. Okay, so you can see structure starting to break here, right? Higher high, or potentially breaking higher low, higher high, higher low, higher high. If we took that short, if we took a short to see price come into this important level of liquidity and fill this gap, we would have to see a break of structure to the downside, right? We would have to see a low breaking this previous low right here. And then we would have to have a previous low high. And then reconfirmation, this is where we would get in and take price to this important level of liquidity, right? Right after market open, okay? So if we do bar replay, and I'll show y'all where I took the trade here in a second. We took shorts, right? We're still rejecting right here. So this isn't a break of structure off these levels because price did not close under this level, right? Under this level right here. But we can see price made a lower high on the hourly and struggled to break above once again. Then on the hourly, it flushed, but then we go to the 30-minute and the 15-minute to get our entry, right? To get our confirmation and get our entry. So on the 15-minute, you can see that break of structure a lot more clearly, right? Higher high, higher low, higher high, higher low, right? This is that area where price is struggling to kind of break above. Higher high, higher low. New York market open made a lower high, and then we made a lower low because this low right here closed below these levels right here, okay? These levels right here, right? And then we had the break of structure. So we had the break of structure, and then we had our candle closure to the downside. And then we took that trade into this level of liquidity, and that's where we got out, right? This is where that gap is, right? Look at that's that big gap, okay? When you go to the 30-minute, you can use the 15 and the 30-minute to just get that extra confirmation that price is going in a certain direction. Because when the 15 and the 30-minute break that structure, and those are aligned very well, it's very, and the hourly starts to, and the hourly has a liquidity in that direction, right? So structure broke to the downside here, and then we have all this strong liquidity on the hourly. You can have that confidence to take that short sell and see price sell off, okay? So on the 30-minute, right? Higher high, higher low, higher high, higher low, higher high, higher low. Market open, lower high, then that 30-minute flushed, closed under all these levels, right? These previous lows, this one and this one, lower low. And then candle closure, we're taking that short sell, okay? So if you wanted to take this strictly on the 30-minute, you could have taken it right there, put your stop losses right there. That's not a good risk to reward, right? You would have to basically try to take it all the way down here, at least down here. But we're not looking to enter on 30-minute candles. We're looking to enter on 5 and 15-minute candles, okay? So when you go to the 5-minute, right, we had that break of structure right here off these levels, right? Higher high, higher low, higher high, lower low. Price struggled to break structure once again up here, right? Rejected, and then we had a lower low right here that closed under this low and all these lows over here, right? All it took out all this liquidity. Then we're getting in on our confirmation, right? Where price candles close, and then we're taking our candle closure confirmation to the downside, right? Break a candle, and we're taking our, right? We actually got out, we took out all that liquidity. So we got out like right here, okay? So this was our trade right here. And then we took out all this liquidity right here, okay? We got a 1 and 2 on that, okay? Step 1, mark out previous session highs and lows. Step 2, go to the higher time frame, the hourly, mark out important levels of liquidity on both sides, right? To the upside and to the downside. Okay, we trade specifically at market open, sometimes 10, 15, 30 minutes after market open. We have to get our confirmation. We're not guessing if price is going to take out liquidity to the upside, right? We're not guessing if price is going to take out this liquidity or this liquidity or this liquidity up here, or this liquidity, which it did, or this liquidity or all this liquidity down here. We're not guessing. We're waiting for breaks of structure, right? We're waiting for breaks of structure in that direction, and then we're waiting for our candle confirmation, right? The candles are like the language of the market, and then at the same time, you're kind of analyzing on the higher time frame. What are the candles doing on the higher time frame, right? You can see right here, like I mentioned, New York, or not New York, London, yeah, London and New York, right? On the hourly, they're struggling to break out of this level of resistance, right? Right here, right here, right here, right. These are all 30-minute candles. Failing, 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 fail, right? All these candles are failing, and then we have that big candle on the 30-minute that flushes down. Okay. Go to the 15-minute, same thing. Same thing on the 15-minute, right? Price is struggling to break out, failing, right? All these candles are 15-minute candles. All these are failing, right? They're failing to break out, failing. Then we had that 15-minute break of structure to the downside, which broke this previous low. And then we have our candle closure and confirmation back to the downside, and we have our liquidity that we marked out, right? So it's important to mark out your hourly liquidity because you don't want to get in these trades without knowing where you're going to exit, right? If you're getting in these trades and you don't know where you're going to exit, you're going to be lost and you're going to get greedy and you're going to say you're going to want to hold price to something to a level that you haven't given yourself any reasoning of where it's going to go to. So that was our trade right there. And we made 310 on that. That was a solid trade. That's it, guys. If you liked the video, comment down below, subscribe, show some love. We'll see you on the next one.